Audio morning brief for the U.S. grain markets. I'm Rich Paz for Critical Point. It is 9:50 a.m. Eastern Time, October 30th. So we got a little bit delayed here. We're running models and analysis, trying to keep up with the stock market and prepare for the Federal Reserve meeting Wednesday, which probably has nothing to do with the grains, although always keep in mind macroeconomics can show up a little more in soybeans than corn and wheat. Okay. All right. Any rate, corn market. Looking for a level 3 bottom this week if it was not placed last week. Looking for rebound into a level 3 top this week. And I don't think it's going to be much of a rebound. And I think it's we've seen the downside that we said would likely occur or could occur. But to me this morning I look at that saying it's a little lower than what I wanted though. And so I'm a little suspicious there's limited upside here for a while, that they're just going to stall this out into November. And so the best I could tell you, if they want to trade it above the overnight high of 484.25 December, probably got a level 3 bottom in. And I think even though last week I said any positive day last week could be a level 3, well, we're not seeing follow through this morning, so we don't know so much. But I think any positive day through this week is probably going to be a sign of a level 3 bottom. And the upside might be limited to about the 490s, okay? And additional downside might be as low as getting near 470. So keep that in mind. The market is quite oversold. Some might argue even extreme, according to my favorite indicator. And the other indicators, some of them are all over the place, a little bit oversold to extreme, somewhere in between. So I think they're kind of on the same page here, and the technical stuff is basically just saying, in terms of the business cycle, yeah, we have a right to look for a bottom, and the model is saying it's time for the business to change a bit here, where we have a little more demand than supply or selling or whatever, okay? But for the moment, I would say it's not looking that spiffy here for a bottom, and we may have to wait it out just a little bit longer here. And the longer it takes, then the less amount of time to rally in a level 3. And I'm just concerned it's stalling out. And I've said all along, even though I'm bullish in early November, and I think we can get another spike higher, you can see somebody out there thinks the move was already over. And that's why it sold off as sharply as it did here. But I think it's kind of like a little late harvest supply coming in, and maybe some concerns of the future or where we're going. And after all, crude oil didn't really follow through on the Middle East. And if anything, people are saying the energy companies believe there won't be any kind of an energy problem. Well, that's one less bullish thing for commodities in general and the pro-inflation people. All right, so I don't think they really want to do much of anything with these grains for a while, but there's still that bullish chance now into year end. But I think it's going to be sluggish. There's nothing much exciting going on there. Let's go to the January soybeans. And I realize we have a negative reversal today. And you might be thinking that's a level 3 top. And you know what? Yeah, because if you may recall, 2 weeks ago, I said it's too soon for a level 3 top. It ought to rebound. Now I'm looking at this model output. And I'm going to go ahead and call level 3 top, and it ought to be about the latest allowed. Okay, now, the problem is, did we put in a level 3 bottom last week? If we did, this market could go lower into next week. And yes, that means it could go all the way down to 1260 or a bit lower, but my guess is it's really more range trade. And we just haven't found the floor of that range, meaning it's probably going to take out last week's low, but it doesn't have to go down to 1260. I don't think it will, okay? But that's just me thinking. The model's saying, no, not betting whether it will or not, just saying it can, okay? Another scenario, though, is since the top came in so late, it is possible that it puts a level 3 top in today and puts in the bottom as soon as tomorrow. Or going into the end of this week. But if it's going lower next week, I'll flip back and then show how we can explain that yeah, it was different and it was supposed to be lower in next week. And then we'll see whether there's going to be even more downside during the week next week. I think another thing I'll look at then is for the bigger trends. I'll just say this market's probably in a range trade, maybe all the way through next week. But it might just be a hesitation here that wraps it up this week. And the next thing you know, it's higher next week. And I do like those larger trends that I forecast last week and even prior weeks, that soybeans can work higher into late November, December. It's just they don't have to work higher at the start of November, all right? So we may see some sluggishness wrap up the month, get a start to the next month, and then the better demand comes in to push those prices higher. Again, I see more likely higher for all three markets going into the end of the year, but I can see how it's range trade based on, doesn't have to do all that much. And I don't really see exciting, outrageous bullish until we get past January 1st, if not all the way in, if not waiting even till spring, summer, okay? It's bullish, but it's not that bullish. There's no reason for them to chase prices higher to much higher, at least not yet anyways. Maybe we'll get some development next 30, 60 days out of South America that can help. Maybe the world will calm down. Right at the moment, some people would say, well, I got to buy commodities because of these world problems. But you can see if you study your history, there's been times we had these world problems and commodities went down. All right, let's look at the wheat market now. In the wheat market, I'm more comfortable with this one and what's going on. If it didn't bottom last week for level 3, it can bottom today. It should rally this week into level 3, and I think it probably has a little better probability than corn and soybeans actually, but it feels like all three markets can have a bit of support here. And again, though, even wheat can join corn and soybeans in that it might be bullish in the year end, but it might be more of a range trade, base building, and I would think it's just building long-term bullish potential. So I would probe the upside of wheat. I'm not so sure about the corn and soybeans this morning, but if you're interested in those bigger trends, I think there's a reason to own corn, soybeans, and wheat. Now, if December Chicago wheat trades below 563 and a quarter, it's still searching for that level 3 bottom, and I would dial in 560 to 550, but that's about it for me. That's all I really see. And if it trades above Friday's high at 582 and a half, and better still, if it closes above it, I think that's a sign level 3 trend is up and working for this week. And a level 4 interweek bottom is due right now for wheat, but I can see how it can spill over into tomorrow and delay. Something might go wrong, but I think this is probably the day for it. And it'll be very interesting to see if it rallies today into tomorrow, but also takes out Friday's high, and we got the daily stochastic acting bullish. It's on the buy side and oversold here for short-term traders. At any rate, that's what I think is sideways in the end of the year, but ideally up some and leaving the door open for a little more upside excitement. And I think the downside is the more limited in terms of direction and probably just base building long-term for a bull run next year. But the point is we may have well put in all those bottoms for all three markets to start that long-term bull market this year, but it could just be a slow, sluggish start. Past results and unassigned ticket future results. Have a great day. Thank you.